Good morning, everybody. This is your Euro USD setups for today. So this is still very much ranging, and we also are forming a triangle at two pretty important levels, in my view anyway, and that is 109795, which is the high of yesterday, and then we have 109629. So that's kind of the two levels that I'm paying attention to. Moving averages are kind of nowhere, in the middle of nothing. Oscillators are sort of looking to cross over the downside or continue to the upside. But this is a consolidation pattern. This triangle is very clear, and it is a range. It is dangerous. It's not something that I like trading. Look at the 3 hour. We are in amongst the moving averages. Haven't had a crossover the moving averages. They're all flat. So if you looked at this with the Bill Williams strategy, you would see the alligator sleeping. You looked at this with a Bollinger Band strategy, you would see there would be a squeeze forming. So there should be a breakout one way or another, but I'm not going to try and toss a coin and find that breakout. So for me, the safest bet is just to wait this out. So at the moment, if you look at this, it does look like a rounding bottom, lower lows, and then higher lows, and then we've got this zone of resistance that we need to get through. So this 109629 is quite significant. It is the apex of the triangle, so you can see the top triangle, bottom triangle, that is the apex. It's a major level as well if you look left. So typically if you do get a break to the upside, you should see price come back and test that. If you get a break to the downside, you should see price come back to test that. That's why triangles like this are often, you get a break, you hit a target, one of these fractals here would be the target, and then typically reverses and heads off in the opposite direction. So it's not really a pattern I like trading. But anyway, the confusion is here. Nobody's really sure what the Feds are going to do with interest rates. So they're listening to what they're saying, but they're second guessing what they're actually trying to say. So the indexes are rallying at the moment based on tech stocks, which is where the opportunity resides. But for me, I think this is something that you need to leave alone, and we'll take it day by day and see if we can get going. So the 15-minute has broken the moving averages to the upside and come back to test it. We've stayed above the 150 EMA. We've got the crossover. So bullish signals here galore, but I'm only interested in getting into this once we start breaking through the highs of yesterday at 109795. If that doesn't happen, then we will sit on our hands. So short and sweet, I'm sitting on my hands, not interested in this right now. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.